So thanks, and thank you very much to Congressman Pittenger for having me today. My name's Craig Timm. I'm from Bank of America. And what I'd like to talk to you today is about illicit finance, the role the financial sector can play in combating illicit finance, and I think most importantly for this audience is the role that you all can play as parliamentarians in helping us to improve the effectiveness of that system. Now, let me just start quickly with the challenge that we're facing. We've heard a little bit about it so far, but when you talk about, we've heard follow the money. When you talk about proceeds of crime, we're talking about $2 trillion every year in the proceeds of criminal activity. Now that doesn't include corruption, tax evasion, or cybercrime. If you add those in, we're talking about $8.5 trillion in illicit activity. That's roughly 9 to 10% of global GDP. So massive, massive problem. In order to fight that, most every country in the world now has what they call an anti-money laundering regime, where there are requirements put on the financial sector to help in this fight. Now, we as a global financial sector spend $180 billion a year in this fight. That's $180 billion spent by the financial sector per year. Just think about that for a second. That is bigger than the GDP of 161 countries, roughly the size of the GDP of Greece. $180 billion per year spent by the financial sector. What are we getting for those results? Not a whole lot, if we're honest. We've heard today multiple times the need to seize more money. You got to take the profit out of crime. That's what the anti-money laundering regime is about. And today we seize less than 1% of all of these assets. So why is that? Right? Why are we not getting our money's worth? Why are you as governments not getting what you should expect out of the financial system? And I think there's a few reasons. And then I'm going to get to a solution too. I think first, we don't define in our anti-money laundering regimes, no country on earth, what we actually want to achieve, and we don't prioritize. So there's no country that sets out a clear standard for what does it mean for a bank like mine to be effective at money laundering. And there's no country in the world today, until the United States this year, that actually establishes national priorities for us to focus on. Instead, we've got most every country in the world, their anti-money laundering regime focuses on suspicion and this broad requirement that banks report on suspicious activities. No more or no less importance is given to any topic over another. So we heard about human trafficking before. I'll use that as an example because I think we can bring that to life. If I identify a human trafficking network, I'm not given any more or less credit than if I report on a pretty low dollar unusual cash deposit. I mean, there's a problem there. Think about that in any other walk of life. If you don't have priorities, there's no priorities, right? And so this leads to two significant problems today. One, you get a lot of reporting on things that are quote unquote suspicious, but probably aren't criminal and not really helpful to law enforcement. And two, because we as banks have to cover the wide array of every potential crime, large and small, we spread our resources very thinly. So we can't get deep. And that problem is exacerbated by the things that I think you care about most, human trafficking, terrorist financing, those things, require significant investment. They require time. They require resources to detect. So that's problem number one. Problem number two is we operate in silos. The public and private sector, as much as we're trying to break that down and we're making progress, we operate in silos that the criminals just don't operate in. They move freely across countries. Any criminal group worth their salt is using my bank and 12 other banks to split it up and make it harder to detect. And there are structural things in place in certain countries that prevent information sharing, both between the public sector and between the private sector. There are cultural limitations sometimes, but it's a challenge we need to address. And then I think the third big issue is, and I think we'll hear some of this from some of my other panelists who I think have solutions potentially to address some of this. We've traditionally taken an unsophisticated view of risk. Your money laundering risk was traditionally based on who you are or where you're located largely. So for this group, if you're a politician, you've traditionally been thought of as automatically high risk because of potential corruption. Right? We know that's not true. We know that for any customer group, the vast majority of those customers, no matter who they are, where they are going to be innocent. And when we apply things bluntly like that, we spend most of our time, energy, and resources on the innocent, because now I have to collect extra information on all of you. Whereas if I just looked at your behavior, I could better segment who's actually a risk. If you're a politician, if you're a parliamentarian, and all I see is your check from the government, normal household expenses, you are not high risk. And I shouldn't be treating you like that. And so part of the problem traditionally is until recently, we haven't had the technological solutions to be able to deal with some of this. And I think you'll hear from some of these other folks about that. So the good news, and the good news for you specifically, is that we can do something about this. And this is where I'd really like to salute the US Congress for their work in this area over the last several years. On January 1st of this year, we passed in this country the Anti-Money Laundering Act of 2020. And this was something a number of years in the works. It was something that really, not only is it good policy, it was an example of good government. Republicans and Democrats coming together. This is not a political issue. It's how do we make our communities safer? Those numbers that I started with are not acceptable. How do we fix it? And so they sat down with law enforcement, with the private sector, with the public sector to get things right. And I think it was amazing earlier today. We kicked off the day hearing Senator Cassidy speak eloquently about money laundering and trade-based money laundering, right? That was incredible. And that, I think, is just an example of the dedication to get this right. And so the Anti-Money Laundering Act of 2020, I think, can be a blueprint for countries around the world to try to attack some of those problems that I laid out. So first, it establishes national priorities for the first time ever in this country, and I'll talk a little bit more about that. It requires and demands more information sharing to break down those silos. And three, it encourages the use of technology that'll be so important. And so first with national priorities, I mentioned that to date, we've never had priorities. And so I don't think you can underestimate the difference that this could make. Our bank does not spend most of our time on things like human trafficking, terrorist financing today. It's collecting due diligence on a broad swath of people. It's trying to cover every possible area. By focusing this, you will see incredible results. I think we heard earlier in the human trafficking panel that the UN spends, I think, $500 million a year on human trafficking. Imagine if we could redirect just 1% of what the private sector already spends. This is no new money. This is net even. That's $1.8 billion we could direct immediately to human trafficking. Imagine the effect that would have. And that's just 1%. And so I think you cannot underestimate, I've said this before, that we're just starting here. The priorities were just announced in June. We're just learning how to do this in this country. But from the results I'm already seeing as we're shifting resources to these things, we're not talking about a 1x improvement. We're not talking about a 2x improvement. It's 50x, 100x. We are going to make a huge difference on the things that matter most in this country. It's game-changing. Information sharing was the second one, and this is the AML Act does a few different things to improve this. One, it formalizes an infrastructure to share information. So we've had something called FinCEN is our financial intelligence unit here in the United States, and they've had something informally called the FinCEN Exchange for several years, where you can share information. They bring together the public and private sector, law enforcement, banks in a room and talk about problems. The AML Act formalized that, and that's important. We need to have the infrastructure to share information. If we're going to do this at scale, it can't be something informal. It can't be something we're doing on the sides of our desk. We need to have national infrastructure led by governments to facilitate this information sharing. Second, the AML Act requires the government to give more feedback to the private sector. Now why is that important? It's important for a couple of reasons. If I'm going to use the technology that we're going to talk about in a second, and these other guys might talk about, I need to know the latest in how criminals are acting. I need to be able to train my systems on that. And there's no better source of information for that than the government. If we think back to that human trafficking panel earlier too, we heard that the ability of public-private cooperation to amplify work, and I've seen that firsthand, right? This stuff is for a bank it can be hard to detect on our own. It's not easy to detect human trafficking, even with technology. But when the government comes to us and says, look, we know these are human traffickers, can you help us? Can you help us tell who they're dealing with? Can you build the network? That's when you start to achieve great results. That's when you don't just go at the lower level folks who can be replaced tomorrow. That's when you start to build up and you start to get at the heads of the organization. You get the significant asset seizures. Public-private cooperation is so important to impacting the challenges that we talked about. And then lastly, it's technology. We are, the financial sector can be, as a regulated industry, slow to innovate. We can't afford to be slow here. The criminals are always early adopters of technology. They're always first. And if we have any hope of keeping up with them, we need to move quickly. And what does that mean? That means the government setting out clear rules that say, here's how you innovate responsibly, here are the rules of the game, so that if you do this, you can go ahead and go forward. It's not going to be a wasted investment, right? Because today the rules just aren't simply clear enough. We don't know when we can start using the new technology, when we can stop using the old stuff that's not working. And you're hesitant, it's like anywhere else, you're hesitant to invest unless you know that investment's going to pay off. And so what the AML Act does is requires the government to set out those rules of the road. And actually does more than that. It says we should be innovating. It is encouraging the financial sector to innovate. So I think, just wrapping up for me, I think, these three things, any of these three things, establishing priorities, public-private partnership, technology, are important individually, but together they can make a real difference. And I'd ask you all, as you look at your own AML regimes, to think about this. Use the AML Act as a blueprint to make yourself more effective. It will make your communities safer.
Thank you very much, Craig. I think when I saw your name